after 12 noon. I am Mark from Blunhouse Technical Analysis, and I'm here with some of my good friends from the FEG token project and smartdefi.com. And of course, we can't help but mention our exchange partner, which is BYDFi. And of course, today and every session, we give away 2 trading bonuses to some lucky holders of a user ID that signed up under our link, which is available in the X post that you would have seen to catch this stream, or within my profile on YouTube, where you could be watching this now at Blunhouse TA, or on my X profile. Now, let's begin. Today's September 2nd. It's going to be our last stream for a couple weeks. I'm going to be going on vacation, but when I come back, we're going to pick it right back up again, and I think that'll be, I think you get back on the 20th or 21st, and then whatever the Tuesday is after that, we'll pick it right up where we left off. And who knows what this market's going to look like in a couple weeks, because that will feel like an eternity. What we're looking at right now is the daily Bitcoin chart. And before we look into that even, I want to switch gears for 1 second, because what I want to talk about today is volume gaps. The power of volume gaps. We talk about them all the time on some of the shorter time frames that we see. But this is an example of a very big volume gap, and you see the structural level of price. And this is an asset called CFX. It's called Conflux. I think our friend Rico Moneybags is the one who tipped us off to this, so we want to thank him personally for introducing it to me anyways, because it's been a lot of fun to trade. But it just so happens that as I was looking at the daily chart, because, you know, we have to look at the longer time frames, the medium time frames, and so on to get an understanding of where price might be. Is there any critical levels that it's approaching or sitting on? And yeah, there really is. You can see here that this structural level is very important. I'll explain these lines in a minute. And then this volume gap. Here's your upper value area, which you tested and failed. Here's the point of control way down here, and then tucked in here is the lower value range. So when you look at that daily chart, and we understand how price behaves when it falls into these gaps, what happens to it? We know that it moves in either direction, up or down, quite quickly. So if you were approaching this gap from below, you would expect that price had the potential of rocketing higher pretty quick, because there's nothing really to hold it from doing that. Same on the way down, because these candles here are just filled with fairy dust and air, right? A lot of velocity, but not a lot of substance. Now, as we have, you know, you have to make a calculated risk, right? So this is a matter of how confident am I that price would fall into that volume gap, and we would be talking about a potential short, right? We can see on the daily, you know, we wicked, and this was a crazy candle, but you wicked the upper value area and peeled right back, and then the fade begins. If we look at some of our other momentum indicators, so let's, you know, we have a stochastic RSI, a Fisher transform, and then of course the MACD. What's the stochastic RSI show us? Right? It shows us that it's rolling over, and this divergence that it creates, either up or down, is a sign of momentum, for lack of a better explanation. Right? It's that built pent-up energy that's, you know, could potentially be released to the downside. When we look at our Fisher transform, tells us that, and it doesn't change and give us little, you know, moves up or down very often, but when it does, they're meaningful. Now you can see that it started to arc over. It's not fully confirmed yet, but you can see that it has begun, and this is the daily. Now if it does that and it starts to move downward, then you have to feel pretty confident that price wants to move in a downward trend. And then when we look at our MACD, hopefully you can see this, there's your moving average and signal line. And whenever I see anything like this, you guys have known me long enough, this kind of A that it prints, like that means get out. And here you go. Like you want to, if this moving average and signal line gets below zero, the zero level, this could get really ugly to the downside. So on the daily, I feel confident that, you know, price could slip into these ranges. We talk about these candles all the time. You can't predict when you're going to see them. But let's say you took, you know, if you took this signal on the 15-minute, I'm just using this time frame as an example, but if you took that short signal on the 15-minute and got stopped out on this massive candle here, which obviously you would have, this is what you'd be looking at. Now, what do we talk about all the time about these impulse candles up, like crazy candle? This we show them every week, but then the following candle creates an equal top. This is a flush candle, not a trend change, just a flush candle, and an opportunity to re-enter that short, probably with more confidence than you did even with this, right? And then price just sags. You move right along, you move right along, here you are now. This on the 15-minute chart, these are normal, with the exception of these candles, this is a normal ebb and flow of price. The up, the retracement, you know, the up again, and you know, of course, we'll see what comes next. Now, when we switch to the longer time frames, even the 4-hour will show it to us. There's a big gap here. Failed, and this is why we use multiple time frames, because if you're going to make a decision one way or the other for price and trend, you need to be looking at things, and you need all things, and you need to be indifferent to what to price long or short. Right? The job is to monetize the chart. So if you make money on the way up, great. When the time comes for the trend to change and you want to go short, that's great too, right? Monetizing the chart, that's the only job you have. And you can trade this thing or any asset over different time frames. You can be long and short the same thing at the same time. But if we go back to the daily, just for a second, over this longer time frame, I'm fairly confident that price may want to test this gap. And I'm prepared, you know, my fear is, like every trader's fear is, that you reverse and boom, you go out and take out the previous wave's high. The craziness begins. And if you look at Bitcoin's chart today, so that's the daily of this, let's go to Bitcoin. Bitcoin's doing the opposite. So I'm short an asset that's flying in the face of the grand poobah. So just because Bitcoin's going up doesn't mean that something else can't go down. Now, somebody reached out to me over the weekend. There's a reason why we're talking about this, is that they said, oh, I'm getting chopped up and so on and so forth. And when we sat down and talked about what they were doing, they were basically trading an alt while paying more attention to the Bitcoin chart. Well, what are you trading? Bitcoin or XYZ? Just because Bitcoin's doing something and what you're trading is doing something else doesn't mean that what you're trading that's doing something else is all of a sudden going to follow. It doesn't mean that at all. So pay attention to the chart you're on, not the chart that everybody looks at all the time. Should you be aware where the general market, what the general market is doing? Yeah, whether you're trading crypto, commodities, stocks, it doesn't matter, of course. But you shouldn't be paying more attention to the index than you are the stock that you're trading. So don't get lost in the thick of thin things. It's really important to pay attention to the chart that you're trading. Right? But Bitcoin's had a green day and this thing's had a red day. And when that's the case, you have to be one of a few things. First off, you have to mitigate a lot of risk. Because as a trader, I am concerned that I get drafted by the bigger trend and all of a sudden price spikes. So am I going to run tight stops? Absolutely. And I might have to get stopped out a few times before I catch the one that actually runs. Right? And that's okay. I have no problem with that. That's what'll happen up here. I can just say everybody else, right? If I could get stopped out there, I don't know. I'm going to find out. But if I do, and I still feel that the trend or that temptation to test that gap on the daily starts to become a reality, then I'll wait and find an appropriate time to re-enter. If I feel that there's still a strong probability that price will fall into that gap. And this is the gap we're talking about. And maybe we just walk ourselves there, right? Just time frame by time frame. Because this is what you're going to be looking at. Let's blow this chart up a little bit. So that you can see on different time frames what the setup is. So you can see on the 4 hour, there's the 5 EMA. And this 4 hour time frame is important to me. Here's the 12 hour. And here's the daily. And what becomes a reality when you're trading like this is that time feels like it goes really, 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 really slow sometimes, right? And as you're waiting for these things to unfold. And, you know, I'm not prepared to take losses, so I run a tight stop, and once it's green, I can breathe a little bit, and I'm prepared to adjust it along the way, but at the end of the day, this is my target. There's the gap. We show this stuff all the time, and we have the benefit of time and coming back and looking to see how we did, because we're not always right. That's okay. It's a game of probabilities. Shorter time frames are still feeling a little sketchy. And I'm okay hanging around. And if I get stopped out, like I said, you wait, to get an appropriate re-entry, and you re-enter the trade. If you still feel that's the trend. If not, you go long. But here we are. All these wicks tested the point of control, and it just faded. Roll over, get your signal. There's your candle that really kind of created the momentum down. Broke the lower value range. And then it's just multi-time frame analysis. You know what I mean? One after another, to make sure that you're managing the trade. On the 30-minute, what did price do? It tested the T line and then faded. On these previous candles, the ones that actually had some push, did they break trend? No. And this is where you have to trust your chart. Remember, you got Bitcoins on a rip, and you see these two green candles, and you're like, uh-oh, maybe I'm going to get drafted and sucked into that. But what does the chart say? The chart said no. That divergence between the T-line and the 5 EMA was still there, and you can start to roll over. And what we're waiting to see is, do we take out the previous wave's low? Same analysis on various different time frames. So on the previous time frame, which was the 30, we tested the T line. Here we are. Everything's fractal on the 1 hour, and you tested the 5 EMA and also faded. As long as the divergence is intact, the trend is intact. And if you do get stopped out in any kind of irrational moves up or down, you still have a basis of understanding to guide you through what could be your next trade. So again, for example, this big flush candle. That would have been a wonderful short, right? Just as this would have been a wonderful long. But this divergence is still intact. Even on the 1 hour, you tested, you broke through the T line a little bit, but ultimately closed below it. That's bearish. Divergence still intact. And here we are today. So let's see what happens. Let's see if the power of this volume gap, because it's a significant one, if it draws price down. And let's look at what's in and around that gap. So what did we do? We broke the 20, that's the green. We broke the 50, and anyone who knows me knows that's not a good thing, right? We don't like breaking the 50. Our 5 EMA has gone from white to red, so that's telling us that there's, money coming out. And we know that when we break one level, we find the next. So we broke the 20, the 50. Let's throw 100 in here because it ends up right near the bottom of this little shelf, just above it, with the point of control, the red, and then tucked in here is the lower value range. And we've seen time and time again, although it seems unreasonable, that price likes to find that point of control. What's this white line down here? That's an exit. That's a preset exit. Stop and a preset exit. It might take a few days to make it there. You might get stopped out, over this daily several times. But as long as the trend is going in the direction that you believe it's going to, you can manage whether or not you re-enter. This is why we use the volume profile, so that you can identify the gaps, because the gaps are opportunity. Whether it's a short time frame or a longer time frame, the gaps are opportunities, up and down. Price falls into it, it's a great opportunity for a short. Rocket up into it, self-explanatory. This gap here eventually, if price was to move higher and get into that area, it would shoot up quite quickly into the point of control. So we're going to watch this chart. Thanks, Rico, for this, because this has been a textbook thing to play with if you're still in the room.
No, for sure. I appreciate it. It's been easy for me to apply what I've been learning over this time with CFX, and been extremely successful with it. And I think a lot of people that focus on like learning how to trade those gaps, if I can do it, they can do it. And that's basically what I've been doing with a lot of these, finding something that has high volume, something that prints pretty easy, and that lets me apply my strategy.
Mm-hmm.
Because maybe your strategy doesn't work on something with too low volume. This actually has some great
Yep.
volume.
Yep.
You said something earlier that I want to touch on because I was thinking about it. It's funny you brought it up. You said you can go long and you can go short on two different, what I
On
mean?
the same asset, yeah.
On the same asset, right? And lately, because I do so much multi-time frame analysis, I want to ask you, and do you ever, because I almost had the urge the last couple of nights to, in my same BYDFi account, have a sub, how you can have a sub
Mm-hmm.
wallet,
Yep.
where like I would use my sub wallet essentially, let's say, where I'm doing longer time frame trading. on CFX, and then use my other sub wallet for shorter time frames. And just curious if have you ever gotten into that, or is that will you get into analysis paralysis by, because I had a little like my little, I don't know, my brain was trying to think of some stuff where it's like long term I think this, but short term I think that. It's like I
Hmm.
could probably trade both of them, to be honest with you, but just curious.
Well, the what I have actually done in some of the other wallets is create almost like little mutual funds or ETFs. So like the ISO coins. So put together a portfolio in that wallet of ISO compliant coins or something like that, um,
Got
and
it.
separated it that way. But you can do exactly what you just said, right? Like you've got one account to do stuff over longer time frames, and then another one for scalping, right, as an
Yeah,
example.
because yeah, 'cause, yeah, but that was a good one too. I'm glad I was like half asleep last night, and I thought about that. I was like, I'm gonna ask him tomorrow. If he, and then you brought up that thing, and it kind of popped back into my brain again, where it's like you can go long or short on the same. I was like, oh
Yeah,
wait a minute, let me write this down so like that when he's done, I can bring that up and stuff. But that was really good, like having a little sub wallet with all the ICOs. That's some alpha right there. So
yeah.
um,
And one of the things too is like um, being indifferent to price and having no emotional attachment to an asset makes it easier to long and short the same thing, whether it's at the same time or in the same day or in the same week, right? Like over the weekend, I was long for a while, then I was short for a while of this thing. And I have no, my, I had no emotional attachment to it. So I didn't have any sort of, oh my gosh, I can't short this, right? I can only long this because I love it or something, right? Well, if price is falling and you're waiting for a long opportunity, this is a good example. There it is. That's it, right? Even this candle didn't break trend, believe it or not. Like that massive wick that just shot up here, the divergence between the T line and the 5 EMA stayed completely diverged. And that's kind of how you manage, like they don't all start as runners, right? They don't. Um, However, if you focus on good entries, which means, I'm actually going to just back this chart up. So, good entries for me are where you're failing a lot of stuff, right? Like if you fail at 50, you fail at 20, things like that. Or tests, of big wicks through first attempts. Those are usually little tells. Um, but just get good entries. Like don't buy at the wrong spot. Don't buy up here, is what I'm saying, right? You don't want to buy this candle. That's craziness. That's why we do TA. Right? If you want to short this candle or up here, that's another thing. Because this 15-minute chart, this was the first attempt. So if you're analyzing this chart, right, and you see this, right, you're going to see this big green candle that probably would have stopped you out if you were short already. And then you see that, you're going to go, huh, all right, I like these big skis, two equal tops. First attempts typically fail. I'm going to hammer the short button. Like that's a great setup. These flush candles tell you a lot. Those ones are extreme, but still. And the trend is still, look at these wicks. Divergence still exists between the T line and the 5 EMA. And, so far, you're wicking the 20 and pulling back. It's just one candle at a time, one time frame at a time. Stretch out the time frames. What's the longer time frame start to tell us? Still trading below the 5 EMA on the 30-minute. Still trading below the T line. And this is how you're going to you manage yourselves when you're in the trade. Simple. Like that, this is how you this is how you catch the runner. There's your sell, like when you like there's your sell signal right at the POC. Yeah, okay, take it. Do you have any idea that it's going to kick off a trend move down? No, but it does. So now you're in the trade. Don't blow it, right? Don't exit too early just because you think you hit a winner. This is where you just got to inhale and exhale a little bit. Realize that you've been gifted a situation because you got a great entry. Great entries are keys, right? You don't want to, like, if you have a set of averages that have flared out and you have to try and figure out whether to buy or sell in the middle of that, that's purgatory, right? Just be patient. Wait for a break of or a breakout of a particular level, like a break upward of this level on the 1 hour of the 20, or a breakdown. Because you
I jump
know,
in really quick.
yeah,
I just want to give them what I've been using, like, because when the moving averages fan out, what I've been using, I see we got Delatoche and we got Tonio, and I see we got a lot of listeners on X as well. Make sure you guys follow Blunt. I'll do the YouTube stuff for him and stuff because I know he's locked in. Make sure you guys give him a follow because these little things, and he it's so natural to him, so he goes over it. But when these moving averages fan out, something that he says, these little phrases go so long, so you can wait for these entries. The horse will always come back to the barn. I swear to you. The minute these moving averages get way too fanned out, like he says, and I'm sure you guys have heard where, when the horse is too far away from the barn, it likes to come back. And that phrase hits hard with me because my brother runs a ranch and that's what he does. And I've heard him tell me this phrase, right? And when you ride the horses really far away on the way back, you don't even got to guide them. They know how to get home on their own. So
yep.
when you see those moving averages fan out, be patient on your entry. Sometimes that's where like that most excitement is at because obviously it's in some kind of trend when it's fanning those moving averages out. Either it's going down or it's going up and it's looking really exciting, but you want to wait for that next one, that next, when they're gearing all that up, that these things are about to roll over so you can get that fantastic entry and stuff and ride that horse for another ride, I guess.
Yeah, and this is where you're going to be forced to trust your chart, right? So you get the sell signal, so fine, you're short. Where would you have a stop in this trade? Well, if this was the candle that you entered on, yeah, I can see the top of this level and then the base of these candles. Or if you wanted to give yourself a little space, but you'd have to give away some. That could be it up there as well. But you have some clear areas defined where you could set a stop. So let's just pretend that you did set it here, right at the top of the candle where the signal is. You can start to see that as soon as those averages fan out, the only thing that's going to trigger that stop at that point is a crazy wick or a massive trend change, right? And the likelihood of that happening is not so great, right? Because you're in a confirmed downtrend now and you failed one level and you find the next. There you go. Fail one level, find the next. Now, can you be patient through these candles? They're not all red, right? Some of them are green. Oh no, what do I do? Do I sell? Well, no, you're okay because you didn't break the T line. So on and so on, and the divergence is still intact. So you get a little bit of love from the 50 and then you lose it. Is the divergence down still intact? Yep. You still have red and green candles. These are just green candles in a downtrend. Nothing to be scared of. You know this level is the upper value range. Right in here. Or sorry, lower value range. That's the POC, that's the upper. This divergence is guiding you through this trade. That is a long time. You know, let's just 10 p.m., 2 a.m. The better part of a day here that this trade was unfolding. But at no point in time, and this is a great example, did you need to be concerned that about exiting because until here, because that divergence was telling you that the trend down was still intact, even on this candle here. Like you have some impulse down, big green candle followed by doji, that wicks what? The T line, and there you have, I believe that's the 200 MA here on the 1 hour. So you lose the 200 here as well, and that's our basic bull bear indicator on any time frame that we're on. Those are the flush candles we talked about, and here we are now. So we just have to, is it anxious if you're short? Do these candles cause anxiety? Sure they do. Will you get stopped out sometimes? Of course. But if the trend is still intact, you have the skill set now to understand that it's probably okay to re-enter that trade. And you'll also have tight stops in place and so on and so forth to mitigate any risk of a snapback. But we just have to kind of follow the yellow brick road up and down. If the market is telling us, remember, technical analysis is the language of the market. It's a real-time representation of what money is doing, not what people are saying, and we're only concerned about what the money's doing part. We don't care about what people say. We only care about what the money does. That's the most important thing. Let's look at the stock market just for 1 second, because I'm going to use the futures contracts because I can use the volume profile. So we know that the methodology that we use to track price is consistent regardless of the asset that we're looking at, regardless of the time frame, and anything else. So here's YM, which is the Dow. This big red candle has broken the upper value range and hasn't quite wicked the 20 MA, but obviously that's probably what it's looking for. Here's the breakout of the 20 MA. I don't know if we consider this a touch or not, but it's close enough. But here we are. We have to decide whether or not this is just a red candle in an uptrend. So in other words, it bounces from here and then marches on. Or does it fail and start to look for the 50 on the daily? So if it bounces, what do you look for on this time frame, which is a daily? You look for it to take out the previous wave's high. If it fails, fail one level, find the next. So you would be looking for the 50. You'd be very conscious of this gap. Right? So again, we're going to test the power of these volume gaps. When you change trend, you have to know that these levels are draws for price. When you fall into volume gaps, you really test the mettle of your trend. Because if anything's going to trigger a big move up or down, it will be a move into a significant volume gap. Because that's how you can reach these other levels quickly. Like, I'm not suggesting all in one candle you're going to head to the 200 daily. That's not what I'm suggesting, but it can happen fast. On the crypto side, it can happen even faster because of the size of the market comparatively and the liquidity levels. So always be conscious of these volume gaps. on anything you're trading. Because if you fall into them, price can sink quickly, and if you move up into them, it can rise quick. This is the S&P starting to show a sell signal on the daily. So you broke one level, and you're going to look for the next. So you're looking for the 50 MA, and time and price will come together and they'll make contact. Whether that's a contact and bounce or a split right through, we don't know yet. But we just know that we've been given a sell signal. We can also see that our 5 EMA has gone from white to red, which is expressing the money coming out, or the selling. This volume gap with all this gray up here is just light trading. All the density is where the blue is. This is light trading. But the rules of how price manages these volume gaps is the same. No matter what, it just will happen even faster where there's lighter trading. And then the NASDAQ, similar look. Also showing a sell signal today, but this one split the 50. ES is looking for the 50. YM is looking for the 20. But the takeaway is all three of them are having a bad day. So if we close below the 50, what do we start to worry about on the NASDAQ? Here's your volume gap. That's the upper value range. In other words, you might be considered that you're paying a premium for this right now. But that's the upper value range according to the volume profile. Here's the 200, which is almost in line with the point of control. And we know how price likes to find the point of control. And when we break one level, we find the next. And when we break one level, we find the next. And for fun, we can throw the 100 in here just to kind of give us another idea of what it might be looking for. Well, here's the 100 kind of cutting upwards towards that upper value range that we spoke of. If it was to bounce in here, what are we looking for? We're looking for price to take out the previous wave's high. This rollover, we're looking for it to take out the lows. And again, doesn't matter what the time frame is. That's the process. And just because price reverses doesn't make you foolish or bad at technicals. It just means that money's come in, the trend has changed, and time to move on. That's all. You're validated until the trend changes. And when the trend changes, as long as you can identify that, you're okay. You really don't care what happens. This was our Bitcoin chart, where we had drawn out levels on the 4-hour, right? And you can see that these levels, as we moved in time, became kind of relevant, showing us areas of future support and resistance, even down here. Here we are with this wick from today's candle. Price always looks for something. Current price is looking for past. What did it tag? It tagged 100-day MA to the penny almost. And then pulled right back, which is interesting. Today's a bullish green day, but yet, what would it mean if we closed below the T line or we didn't trigger a change in downtrend? Maybe we're doing one of these, looking to take out the previous wave's low. That's a possibility. But we have the benefit of time to see whether or not we're right or wrong. Right? Like, I'm not expecting this to be perfect or anything. I'm just saying, is that what we're setting up? So if I was looking at this daily and I saw the wick and the fade of that level, triggered a short for me, that's kind of what I'd be hoping, right? That this was the top, So you're arcing up. It's a failed breakout. First time you're testing a level which has a more higher probability of failing. Price rolls down and takes out the previous wave's low. That's possible. If it breaks out, I know that I'm looking for the 20 MA, which is also a first touch, so there's a likelihood of a failure, and there's a lot of structure in here too. So it would have to deal with all of that. Breakout, you look for the 50, and again, you're looking to take out previous waves highs. And these levels that we've drawn out here from the past will, in all likelihood, become relevant again. Whether it's this one or whether it's this one, they'll all become relevant again. But we'll see what happens here on this daily. I'll just leave that there. Let's see where we go. This is an interesting day because Bitcoin was 2200 green at one point, and then has since kind of sagged a little bit. Right? We've looked at this chart a few times. This is something called Xano. I've shown it to you before. This is an example of a bullish chart. It's just ripped. You don't know, here's your entry, our script giving us a clean entry signal, and you just have no idea what comes after the current candle that you're on. It's just a process of steps, right, that you use to determine whether or not you're in a good trend. You get an entry signal, you have a nice green candle, you know that the POC is probably going to cause you a little bit of resistance, which it did. Also support. But look at your trend, right? If you're using this methodology as a track for trend, it's telling you that's just a red candle in an uptrend. Red candle in an uptrend, red candle in an uptrend. And then bang. Price goes parabolic. Even this pullback wasn't enough. 3 daily red candles wasn't enough to break trend. And then snap back higher, taking out the previous wave's high. Now you're making new ones. And the divergence here is telling you that there's momentum. Are you trading at a premium in some less dense volume? Sure. But it's still, it's a bullish chart. But when it fades, we know where it's going to fade to, right? It's level by level. You have to have the trend broken, create a new, create a new sell signal. Price will look for the 20. You're looking for first time touches or breaks. If it breaks, you look to the next level down. In this case, the 100's not going to save you any in between. It's, there's a long way down to the 50. The 100 won't mean much as you get close to the point of control with the 200 down here, if it was to fade. But it's still a bullish chart. Look at the weekly. Now, Rico, is the horse a little far away from the barn on the weekly? Yeah. Right? These types of parabolic pushes that create these little air gaps up here. Let's keep our eye on this candle and even next week's to see if we test these wicks. But at some point, you're gonna pull back, and this whole thing will start to test levels to the downside. But it's hard to be patient. Like, if you wanted to buy this, is this hard to watch? Right? Yeah, it is. But because you understand whether you listen, doesn't matter if you're an investor. If you're an investor, do you want to buy at highs? No, you don't. You don't want dead money. Nobody does. Right? This chart is telling us that, look, this thing is a runaway freight train, and I don't want to get in its way. If I'm going to want to buy something, I'm just going to wait for an appropriate time, because I know that eventually we will come back and test levels and there will be a better price available. But not everybody can be patient. And what do? They jump in these candles, right? We know you know who you are, right? You just can't help yourself, and you buy those candles, those parabolic pushes, creating these big gaps that end up being retraced hard, and then you're like, wow, this crypto thing really sucks. I can't make any money. And every time I buy, price goes down. It's because you don't understand where you're buying. That's all. It's a correctable thing. It just takes a little bit of discipline and the ability to block out the noise and just follow the chart and do what you're told. That's the hard part. Not everybody can do what they're told. Now, here's XRP. Love XRP, but is XRP in a downtrend? Yes. It just is. And, you know, I think what's interesting here is the tests of the 20 MA and the 50 that fail. You know, brought you right back to the 100 in the midst of this, you know, volume gap. Here you are getting into the volume gap. What happened to price? Shoots down quick. Why do I have this line here? Okay, so this is just a level that we've drawn, obviously identifying some support and resistance potential moving forward, which kind of puts it at the bottom of that little, well, I guess it's not the bottom, but it's within a bit of a ledge of the volume gap anyways. Price tests the T-line and fades. So somebody will say today, hey, XRP was up 1.35%. That's awesome. Is it? Because I don't look at it that way. I'm not picking on XRP, just the chart. I don't look at it that way. I don't look at it as, hey, that's a fantastic green day. I look at that as a failure of the T-line in a pullback that brought you below the 5 EMA, which is not bullish. That's bearish. Plus, you're already under a confirmed sell signal. And you've been failing structure and major moving averages in the process. Breaking one level, finding the next. There's still volume gap here, and this is where it gets really deep. If price, you know, snaps back to the upside, what's it going to look for? It's going to look for, well, first off, we know that it has to break through the T-line, change trend, but it'll look for the 20 and the point of control, and it will look to this area here, upwards of the 50, where you can see there's kind of a structural level right up through there, kind of in that level here. That's what you'd look for. And of course, taking out previous waves highs. And everything is a process. If we really want to maybe get a look to see if there's something going to change on a shorter time frame for us, what do? We just back it up a little bit. We go to a 4-hour and sneak a peek. You know, the 4-hour has been failing this 200 and 100 level here for a while. Is this going to be a failed breakout? We're going to find out. Or are we going to shoot to try and, this is again, see the structural level, bottoms, tops, boom, lining up with the 50. That would be my next target to the upside. But you just got to slowly peel the onion back. Don't you just love these big parabolic candles up and then the reversal candles that follow? They're just there to make your life crazy. But at the end of the day, now that you understand kind of what they mean and how to determine whether or not they present opportunity to you, they're not so bad. You don't have a problem shorting these kind of tops, or, you know, these kind of tops. right? Here you go, shoot up, equal tops, boom, start to fade. So we don't have really anything to write home about yet. It's still in a downtrend. It's just a green candle in a downtrend. And on the weekly, what do you think price is looking for? How about the 20? You don't have a confirmed sell signal yet on the weekly. But let's say price pulls back to the 20. This is the first touch on the weekly, and it has a higher probability of bouncing. And this level that we dropped on here is actually kind of structural too. That lines up perfectly with the 50. To the upside, you look to the T-line and the 5 EMA, right, for price to push, and then look to take out the previous wave's high. Failing, you come back to the 20. Hopefully you bounce because it's the first test. If you don't, you break one level and find the next. And rinse, repeat. It's the time it takes for these things to materialize that I believe cause traders to make mistakes. To either close trades too late, too soon, or not take them at all. Because they don't have a mechanism to help guide them through multiple time frames and a mechanism to track trend. But we do. Like, even if as all we're using is just, you know, our script, what's it telling us? It's telling us the very same thing. The only thing we're using the averages for is maybe for some targets and some support and resistance levels. But in the simplest form, you know, here's Bitcoin. Are you making lower lows on the daily and lower highs? If the answer is yes, you know, you're still in a downtrend. And here's your T-line and 5 EMA to walk you through all of the intraday nonsense that freaks everybody out from time to time. And sometimes rightfully so. The moves can be dramatic. But this daily Bitcoin chart, I'm sorry, is as clean as you're going to get. You know, nice move down. Here's our sell signal. Look at this point, right? Change in direction. 5 EMA goes red. 2 equal tops. Gotta love that. Look at the divergence. This is just a flush candle, just a green candle in a downtrend, giving you an opportunity to re-enter the trade on the daily. Another move down. You don't break the T-line. Next candle. Impulse down. Sideways back to the T-line or the 5 EMA, and then this candle's got a little push. We'll see where it closes. But so far, you've just been making lower highs and lower lows. And when you go back to a chart like this, it could take several days to fall into that gap in a meaningful way. And the question is, are you the kind of trader that has the capacity to let that trade materialize and let the trend take over and not to get spooked by the sudden moves? Right? Not everybody can let the runners run. They'd rather just take it, move on, or re-enter at another spot, and that's fine. We all have our different methods. But we're going to test the power of these gaps. Because if price falls into this, we're going to have a real nice case study onto that we've picked up live and in advance of what could materialize. If we throw fibs on this chart, which is going to be really fun because of all these wicks, I don't know. Do I do it? Yeah, I'm going to do it. Where's 618? Here we go. So there's 618. Right? That's a level that, because we use fibs, fractals, and filters, right? We've talked about the fractals in the multiple time frames. The fibs are telling us that 618, which we believe as traders through Fibonacci retracements, is a respectable level to look for. We've literally come back to the 50% level, and that's where we're basing out at. So the 50% you would expect. And we've gotten it. Now the question is, is this a deeper breakdown? Or is the structural level going to hold and price moves higher again? Right? We don't know the answer. Right now I'm positioned that it's going to move to the downside, and I could get stopped out at any moment. And if I do, I'll just reevaluate the situation and determine whether or not I still believe there's a willingness to test this area, and I'll find a spot to re-enter again. Not the second later or anything like that, because great entries are important. Right, let's go back to the great, let me get rid of this. The great entries are important because it helps you get ahead earlier. There was the 1 hour on this chart that gave us a really nice entry, right? Failure at the point of control, big wick, extension wick to test, this happened to be the upper value range, and that fades. That's kind of a sign of weakness in my mind anyways, and it would have been an even better spot to short, but nevertheless, following the script, that's what we were given. And believe me, as it melted, you weren't upset about missing a couple candles. Right? Because you're doing nothing. Yeah, that's right. It's just the insurance. But if you entered up here, believe me, by down here, you're not even thinking about it anymore. And this is just, oh my gosh, what do I do? Right? And
I have a list of house phrases. You see how I know them all, right? That's and I've been there where it's like, I could have got there, but I remember, that's the insurance you pay to know that you're again in that great entry, because it all comes back into your entry again, right? And it's like, yeah, it would have been nice. That's cool. That would have been awesome. But again, I'm here to trade on my strategy and finding a great entry. So, you need the good entry because it helps you build confidence to hold it a little bit longer. If it's not based off of anything and it's just off of just like, you licked your finger and you put it in the wind and it's like, oh, it's blowing east now, I guess we're going east. It's like, it's not as true, right? The wind changes quite a bit.
Well, sometimes, people reach out and they'll say, damn it, I've been stopped out like so many times today. And you can hear the defeat in their voices, right? But I really don't want anyone to look at it like you're defeated. That's not it at all. You actually were successful. If you had a reasonable stop in place, even though your stop got hit, you mitigated the risk. And you did the right thing. The reward was the stop. So I'll give you an example. The same person would say, I had a stop in place, I was in profit, and then price reversed, and then I canceled my stop thinking that, maybe it would, turn around again, and then before I knew it, I was underwater. Well, that had nothing to do with anything other than, instead of closing your stop, why didn't you just close the trade? Right? Could have just closed it. You could have just you could have just closed it green. Even if you made 50 cents, you could have closed it green. But what prevented that person from doing it? I'll tell you what it was. It was a little bit of ego, right? And a little bit of, well, I don't want to be wrong, right? But don't look at it as wrong. Just look at it as, well, the chart invalidated. That's all. And you move on. And when that happens, if you have reasonable stops in place, you're not going to have that day where you're completely slaughtered. The only thing that would get you there is just over trading at that point. And you need to kind of, like, I'll be honest, over the weekend, I caught myself I got stopped out a few times, and then I almost felt this kind of anxiety take over where I started feeling like I have to get back at the chart, right? And as soon as I felt that, time to take the dog for a walk, because I recognize that's a bad thing, right? And it becomes instinctive. So, you know, don't think of the stops as a bad thing. They're not. If I get stopped out, 9 times out of 10, it's green, right? Because I make sure that I try and find, more often than not, entries like this. And once you're in this, you're in the driver's seat. This is the benefit of the good entry, right? That's why you're patient for it, because being able to be your own master when you're on the right side of the trade goes a long way. That's when you just simply exhale and follow the yellow brick road, right? If this divergence is still in play, you're okay. There's another one for you, Rico. If the divergence is in play, you're okay.
There you go. Man, these things do so much, man, and they're so natural to you. So that's why sometimes I circle back to them, because we got a lot of people listening on X. I'm watching it right now.
Cool.
It's you're some of the people listening on X. Welcome. This is something that just over, I don't know, a couple months, it's just been night and day. So, and it's a combination of the wisdom, because you can learn all the technical analysis, but sometimes it's the little bit of wisdom behind it, right? It's like, and that comes with some of those phrases. So that's why I like them, and I think they resonate with a lot of people, and I want to bring them back, because, or like circle back to them. So,
Well, I
um,
appreciate that. And listen, I'll be honest with you guys. When I first started doing this, like, almost 25 years now, I guess, I had the mentality that I had to learn everything. I had and I overwhelmed myself with knowledge that I didn't really understand. And it took me a long time to sort it all out and get myself in a place where I could make sense of everything. And then that's when I realized too that this is a language, right? It really is a language. If you believe math is a language, which most reasonable people do, this is a derivative of mathematics and is a language unto itself. And it is not, everyone around you wants to make you think this is complicated. Nobody should be doing this other than certified professionals, because it's risky and so on and so forth. Or, unless you went to graduate school or MIT, or God knows what other finance program you took, there's no way that anyone should be trading. You're going to hear all of that stuff, and you'll always hear it. It'll never go away. Trust me, it'll never go away. It'll always be there in the background. And there was a long time, guys, people didn't even know I did this. Maybe my family and a few close friends. Other than that, nobody. Because I didn't want to hear all the BS all the time about, you can't really tell what the market's going to do just by looking at lines on a chart. Well, right? If you believe that they are just lines on a chart, then you're probably right. But if you understand that those lines are part of a greater language, you're probably wrong. And I believe that it is a language, and the market will tell us what to do. We're not here to front run it. We're here to follow it. You don't get extra points for being the first in, right? You hear of first mover advantage. You used to hear that in the cannabis industry when it first started. First mover advantage, first mover advantage. Because all that means is you're the first one to make a whole bunch of mistakes for everyone else to learn by. That's all that was. That's all that was, and I'm not so convinced they learned a damn thing. You're not here to front run the chart. You're not here to front run a vertical. You're here to make money. Being first doesn't mean anything. No one remembers who was first at the end of the day. And most people don't care. All I know is you're looking at the NVIDIA chart. So we know upper value range, POC, lower value range. I'm just going to move that out of frame just a touch. What does the chart tell us? Doji candle at the top of a plus, an uptrend. Obviously a level of price resistance up here. Our 5 EMA goes from white to red, so that tells us the sellers have showed up. The following day, price breaks the T-line in the 5 EMA and does it with enough momentum to produce a sell signal. That's all I need to know. I don't give a rat's ass how many GPUs they sold, how many they plan to sell, whether there was a fire in the plant, whether a ship sunk, whether there was a strike. I don't care. I don't care. I don't care how much money they say they made. I don't care. Nor do I care how much money do they think they're going to make. I don't care. There's two types of people in the world, lion tamers and lion bastards. And how many lion tamers have you met lately?
You have to
Not
do
too
that
many.
to, you have to be like that. I noticed, to be indifferent to price.
Yes.
You know, if you struggle with that part right there where the chips and how many chips they're gonna do and all that stuff, that's where the price, you start to get emotionally attached to this thing. The more you start to dive into that, it starts to create this, you start to care about the price, because price is now, you're starting to reflect about how many chips they're going to be selling it, and the, you know, the media coverage around it. But
That's right.
when you're following it like a treasure map and you're indifferent to price, it's like, I don't care how many chips you guys got, good for you.
No.
You guys can have Frito Lay chips for all I care.
That's right.
I just want I just want to print. That's all I want to do.
Well, thank you, Rico, because that's exactly how you have to be. And look, my own mother thinks I'm a cold, heartless something something when I discuss this kind of stuff. But probably not understanding it's kind of what you do. It's not who you are. Right? And thanks to our friend Carp for that kind of slogan. This is not who we are, it's what we do. That's all. Sounds heartless sometimes, but and maybe it is to a degree, but at the end of the day, it's just based on fact. Right? It's either doing X or it's doing Y. Talking about it is not going to help you as the price is falling. Right? It's just not. Is all I know is that the charts told us, the market has told us, the smart money has told us this was a bit of a top and we're going to sell this puppy off. We broke the 20 MA, so the next day we essentially, well, we didn't really gap down, there's a wick there, but we broke the 20 at open. That's a sign of weakness. All these little things mean something. It also,
Gap is huge on the right.
yeah. And when you see the 20 breaking the 20, you automatically go, okay, where's the 50? Oh, crap. Well, we broke that the day after the previous day. So then we gap down and we break the 50. None of this stuff is bullish, by the way. Could be XYZ company, bearish candle, bearish candle, bearish candle, breaking one level, finding the next. There's your big volume gap in this light trading. This is just the market talking to us. So we see that we broke the 20, you can see that we broke the 50, and now we're going to go, okay, where's the 200? Oh, crap. Now you feel depressed. Now you're depressed because breaking one level, finding the next, breaking one level, finding the next, I'll make you feel a little bit better. I'll throw the 100 in there, but that's not going to help your heart attack because that's only at the upper value range. Because all this is a premium, in a sense, right? Here's all the dense trading. Here's where all the money is.
What's cool about that volume profile so much is, like, if you look at the 100, it's right at the upper value range. If you look at the 200 by the POC, it's like that thing is, it's giving you an idea of where this stuff is coming to.
And the best part is we have the ability, because we believe in fractal analysis, fibs, fractals, and filters, to back up our time frame so that we can get a peek into what's going on in a smaller set. And on the 4 hour, this break is both of the 50 and the 20 right here. Was breaking the 20 on the daily bad? Yeah. But breaking the 50 and the 20 on the 4 hour actually to me sucks even more. So, and you just keep backing it up. You know, impulse down, here's your snapback. Fails that resistance, does not break trend. 1, 2, 3, 4, 4 green candles. Even the fifth one pushes above the POC, but they can't break trend, can't break the 20. This is the first touch failure, right? There's your break of it. There's your first attempt failure. Another attempt at the POC and the 20 that fails. That little doji, if that didn't scare you, I don't know what does. But and then the trend continues. Impulse down. Look at the momentum that's expressed here, and of course you gap down, breaking the 20, or sorry, the 50 and the 200 in this big red candle. Sideways, a little down and sideways. What do? Is all you could do was test the 5 EMA. Bam, fade. You don't see any white in here at all. Like sometimes you'll see a flash of white showing you a little bit of effort, but nothing. And this candle has to test first the 5, then the T line, and then it has to have enough juice to break trend, and then it'll look for the 20. If it fails, well, look for the next level down. And it doesn't matter what we're looking at, stocks, crypto, commodities, doesn't matter. Here's Tesla. This chart's a bit of a mess. Well, it's kind of working. I shouldn't say that. So here you are printing a sell signal. You've tested the 50 on this daily. Here you broke through. That's your first test bounce. Now you're going to come back and test again. A bounce does what? Gets you to try and to take out the previous wave's high, which would create a higher high. So here you have a higher high, a higher high, a higher high. If this was to bounce, it would create another higher high. And then, of course, you can see the higher lows. That's what an uptrend should look like, right? Move up, retracement, move up, retracement, move up, retracement, move up, retracement. But the general trend is up. And, of course, to the downside, it would just be the opposite. What you're waiting for is, does it break that support? If it does, well, then it kind of invalidates that wave, right? This whole trend move higher, it would invalidate it. And then if this was to fail, then you're looking to take out the previous wave's low, which would get you to break the 50. In all likelihood, you're going to test the 100 and, you know, rinse, repeat. It wouldn't be the first time that it would have seen it, so there's a chance it could break. It's up, down, or sideways, and you just have to look at it one window, one time frame at a time, and just let the chart guide you. Let's look at Apple. So we kind of broke our trend line, coming back and testing the 20. Right at, I don't know if you can see this, this looks purple. It's because the price line is sitting right on top of the upper value range. So here you are testing the 20. It's the first test of the 20 since it broke out down here. And it's getting a little support. If it fails, take out that previous low down in that range here. And of course, if it pops, you're going to look to take that high first and then that high. I don't think it's going to go sideways here, not with this gap below, because if it fails, it's going to fall into that gap. But I don't think sideways is going to be an option. It's going to pick one way or the other. Now, let's look at Solana. Now, the Solana chart very similar to the Tesla chart. You can see the higher lows, right? So that means you're getting support in the appropriate places to catch those retracements. and they're bouncing and taking out the previous wave's high. If we look at the weekly, got nice support from the 100 MA. This has just been marching higher. Like, yeah, it's had its slippery slopes, but it holds all the levels that it needs to hold. Even on this big red candle, it wasn't enough to pull the T line down, or sorry, the 5 EMA down through the T line, trigger a sell signal, and change the trend. Still a bullish chart. And when you're looking for levels of possible retracements on shorter time frames, look to the longer time frames. So what would you look for? You would look to the weekly T line to see where, you know, if I was on a shorter time frame and I was looking for a stop level or an oh no I'm out level, it would probably be that. Because you know that if you break the T line, you might be in for a pullback. Just as an example of, again, how to help manage once you're in something. Remember Monero that we've looked at for ages now? Look how it's played out. This, you know, this line here was a target, this yellow line, a target for price when it rolled because of this bench of past price to the left. Well, it did hit it and then subsequently broke it. This is what we were looking at. So there's your confirmed sell signal. It's a nice smooth chart, and you've got all your major moving averages twisting together, and that sell signal shows up, which tells you you're going to break that twisting mess, which it does. Even when it comes back to the 200 and this level that we threw on there as a potential target, now that we've arrived at the target, what's the chart tell us? The chart's telling us that this move that we're in, that we were fortunate to get into, you know, on the 18th of that month, which was July, it's telling us that we're still in a downtrend. We've arrived at our first target, but we're still in a downtrend. So what do? Well, it's okay to stay in the trade because the chart's telling us it's okay to stay in the trade. Look at these tests of the T line. And here we are. This level again is relevant. Is all that what is the only reason it's there is because of this bench of past price. This kind of reminds me of the Bitcoin chart a few years ago. Remember when there was a bench at 30,000? And then when I said that out loud, everybody freaked out. And then a few weeks later, we were like kissing 30,000. Well, that's why, right? Because current price is looking for past. You know, this is just another example of it. But the relevance of this as support and resistance even today, it's pretty interesting. And that's why we drop these things here. On the daily, though, we're still in another downtrend. What has to happen to break it? You got to get enough momentum to push the 5 through the T line and some other stochastic RSI parameters that are working in the background to try and filter out the stuff on shorter time frames, so that you're not in and out, in and out, in and out, in and out constantly. Any other tickers you guys want to look at today?
I've been all over CFX lately.
Yeah, you and me both. I've lost touch with reality now because of that thing.
Yes. I love it. I love it. I also got one of my friends has a trading account now. He's been trading there as well. He was like, dude, it's crazy how much money you can make off of that. I was like,
yeah. No, it's true. Look,
yeah.
this is JAM USDT that I can't remember. Somebody asked in the last stream to look at this chart, and well, look at it. It's just completely destroyed, right? But eventually, You know, this green candle has showed up. Is this going to be the one that changes the world? I have no idea. But that's a 14% green candle today. So, you know, if you were buying down here, it's still meaningful. But it's just another, you know, look how this thing's
It's a
just been
4 hour.
crushed. Yeah. And what does
It's
price want?
4 hour
It wants the
play.
50.
Yeah, it does. Can you put the 4 hour on
Yeah.
for that one?
Not a lot of volume. That's why you get these little hash marks. That's
Right. Yeah.
part of
Yeah.
the reason that they show up. But yeah, so here's the point of control, and that's kind of what it's looking to tag next. And if it breaks through that, it'll look for the 200 and this high.
I got a question for you. Speaking of volume, have you found where there is a sweet spot where, at least for crypto, where you like the volume? Like, I noticed that CFX is in the hundreds, like at least like 400 million trading volume,
Mm-hmm.
and I kind of like them because the trades go through easier, right? The
Yeah.
liquidity's there and everything like that.
Yeah.
Have you found a spot where like it's like minimum it has to have this much on there, or this volume's too low because maybe my trade won't even go through? You know, have you found a sweet spot of the volume?
So yeah, it's going to depend on the entire liquidity picture. But I'll give you an example. If this is Zano, right, that which we talked about before, and this chart's gone nowhere but up, and the daily looks fantastic. But when you start getting into these shorter time frames, this is the 15-minute, you can tell that the volume's very sketchy in here, right?
Yeah,
Like it looks like that jam chart. So
hmm
do I like Zano? Yeah, I do. But when you look at this chart, this daily chart, it really masks how light the volume might be, right? What are they saying here? Is that 1,000? Yeah, that's 1,000. So that's not a lot of volume.
I was trading something on BYDFi where I was like in the green and I put my sell order. It was dancing all around it. It was just like because the volume was so low,
They couldn't
it
hit
took
it.
forever for that order to clear. I was like, oh my god. I was
Mm-hmm.
like, I like it to be, hey, I'm in, I'm out, and I think I'm finding the idea where like at least if it's in the hundreds of million, you have a little bit easier time. Your orders being
Mm-hmm.
completed.
So when it comes to stocks, I I like them to have like at least $1 million worth or 1 million in volume with stocks. Anything under that, I just think it's hard to get in and out sometimes. So I like to see the volume there. In crypto, like I said, I show you that Zano chart, and is all anybody wants to do is buy it. But when you look at the shorter time frame, you can actually see how light the volume is, right? And but it wouldn't stop me from buying it.
Yeah,
The stuff that's memeish, no, I'm not interested in that, right? That I'm really not. But it can have lowish volume, but as long as it's real in crypto, yeah, I'd probably look at it still to trade. But you can see that there is volume in this thing. In CFX, it does have some volume.
it does. It's usually like in the when it was kind of like all, it was underneath 100 million. So I noticed
Right.
I'm paying attention to like when it's kind of getting hot and things like that. But right now, when it's usually over like that, getting close to half a billion in volume, it starts to it's almost too much money flowing where people it's hard for people to ignore. So you start to
Mm-hmm.
see a bit more action on it.
Yeah.
Um, yeah, because it is quite a bit of volume. It's up there.
Well, and then the problem is if you're trading something that has very little volume, and then all of a sudden even the slightest bit of money comes into it, it can blow price up or down to crazy levels.
For sure.
So, I enjoy the ebb and flow of actual price movement more
So
than
do I.
chasing chickens around the chart
Yep,
because
same
that's what
here.
it feels like, constantly.
Ebb and
So
flow is where it's just why it's been. I was trading Solana quite a bit, and that was fun. It had its good flow and everything. But then this one just popped up, and I've seen how easy it was. It was just like, and it's
Yeah,
just kind of like not everybody talking about it too much. So it's just like this thing that's just cooking in the back end, right? And it's like I feel like there's not too much news affecting it. It's just doing its own thing where, Solana, because all the meme coins and everything like that, and you got a bunch of people maybe saying Solana's gonna go. It's just sometimes it gets wild where it loses its ebb and flow because it's attached to so many speculative assets and things like that. Where
yeah,
Conflux is just on its own journey and stuff.
yeah. This is ETHFi, and another one that I used to trade quite a bit until you introduced me to this other thing. But anyways, you can see the levels that we put on here that have become quite evidently support and resistance levels. And these were drawn well in advance. Like as soon as we can kind of connect some tops and bottoms, that's when we throw them on. And you can see how relevant they are, even today. This thing breaks out, it's going to want to test this level all over again because it's been pretty true when it comes to support and resistance. But this chart is still, it's still a downtrend, right? This is just a green candle in a downtrend. It hasn't done any damage yet to reverse the trend. There's not enough momentum, even on this green candle, to pull the 5 up through the T line. And when you put that into different contexts, so Bitcoin's having a green day, it's up 1.5%. CFX is down, 1.3. It's been a little bit higher than this, but it's generally going in the other direction. So as the general market is green, and I believe that the overall structure of this is weak, is that not somewhat supportive of that theory? A little bit, right? When the major market's moving one way and this thing can't catch a bid, and the setup for a potential move down is staring us in the face, it just makes my conviction that much stronger. Like I said,
Yeah, for sure. It doesn't always move with the trend of like BTC. That's for sure. It doesn't
no,
really. It doesn't do that. So, and like you said earlier in the stream, and I'm somebody, I pay attention to BTC quite a bit, of course, and stuff. But you have to be able to identify when something doesn't have that characteristic that it moves with BTC, and just trade that chart. Just trade the CFX chart. Like on my screens right now, all I have up is different time frames of CFX.
yeah,
That's about it.
yeah,
So that's what I'm trading. So I'm focusing on that. But when you start your day, yeah, check out what BTC is doing, and some things obviously flow with it a lot easier,
mm-hmm.
but everything has moments where they just have a mind of their own. So you have to be very cautious of that.
Yep.
Of just focusing only on that.
The 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 power of a volume gap is undeniable, and once just like obviously looking at this daily chart, it's a little longer than watching paint dry, but you could be on the 4 hour, 15 minute, and those volume gaps, they eat price, and you can make a living just setting yourself up with good entries and then trading in and out of these gaps. Again, might get stopped out 3 or 4 times before you get the one that takes off. That's okay. Wait for another entry, a good entry, get green, set a stop, and start all over again. But we're going to see how this one, I know you're not going to miss it while I'm away, that's for sure. I probably will. But we'll see what happens. If it breaks further, it's going to look for the 100 MA and the point of control. And this would be true on any chart we're looking at. Doesn't matter. Absolutely.
CFX has been so CFX has been so nice to me. I'm planning a little thing at the end of the month just to do like we call it here in Vegas. It's called a staycation.
Oh
Where
yeah.
where we actually don't leave. We live here and we just we stay at the hotels down at the strip and just enjoy ourselves.
That's
But
funny.
yeah. So I'll be doing most likely a staycation towards the end of the month. And I think this is what's good about this stuff, Blunt, and to everybody who's listening on X, I know there's a lot of new listeners. This is what this allows you to do. A lot of people are putting a lot of possible fear, uncertainty in the market, all that doubt and stuff. And you got Blunt House about to go to Italy, and enjoy himself. You got,
I'm
I'm
gonna
about to do a
abandon you at the worst possible time, right? Yeah,
no, no. It's not that. I'm just saying it's that when a lot of people are complaining, it's just that they're most likely not taking these trades the right way. When other people can actually just enjoy what's going on, you don't always have to be on this emotional roller coaster with the rest of the market. If like it really hits home for me, like what you said. This is something that nobody can take away from you, right? So
that's
whether the
right.
market's going up, you're monetizing the chart. Whether the market's going down, you almost start to live in your own little world, right? Where you're like, all right, everybody else wants to be on that boohoo stuff, man. I'm gonna do a staycation actually and just kind of relax, until the markets turn back around and everybody gets excited again. I don't want to babysit too much either, right? So
That's
just
right.
enjoy myself because it's here for everybody to do it. Anybody can do this. So if you guys are listening in and you guys maybe you're feeling like, man, even if you don't monetize the chart right away, but you want to stop feeling like you're on an emotional roller coaster and have your own say so what's going on, um, pick this up, right? You don't have to start trading right away. And when you start trading, you can do a demo account, and
That's
you'll
right.
start to notice that a lot of that noise will start to fall to the side as you become more involved into, listening to the language of the money. And that's what's really going on right here.
Yeah. No, and I think it's important that everyone, like, and I'm kind of using myself as an example, is that I made this more difficult than it needed to be when I first started doing it, and it took putting myself through that kind of pain, I think, to get me to the point where I realized that simplicity was the key. Like one of the things I picked up from people like David Steele Smith Elliott and oh my goodness, I can't remember his name. I'm getting so old now that I'm blanking. But these little guys, everything I know it's bad. Eh? Everything they did was seemed really simple to me, and I thought, man, like all this experience and you're dumbing this down. But in reality, that's where it should be. Like we could spend hours in in spaces or other types of collective discussion groups and be talking about price on a chart or the economy or whatever, where the price of anything is going. And you're going to get all kinds of opinions. But it's just an opinion. It's not based on, like, what we do in here is based on technicals. And yeah, I'm a purist, and I do believe that this is a language. I believe the market discounts everything. I don't give a crap about your earnings. It's not important to me. I have a general, um, pretty decent overview of macro. And other than that, the chart will guide me. But the noise is the stuff that gets everybody in trouble. Every single time. They will talk themselves in and out of trades at the wrong time. They'll take the wrong trades at the wrong. It's just, it never stops. You don't have to share with the world what you're doing while you sit at your desk. Focus on what you're doing. Focus on your chart. Everything you need to know is on your chart. Follow it. Don't front run it. And then once you're ahead, allow the chart to guide you. Use those multiple time frames. And before you know it, something that you entered off the 1 hour, a few days later will still be live because you can manage the trade over multiple time frames. And you can adjust your stops based on different levels of those multiple time frames so that, if you want to move your stop on the, maybe it's the 4 hour, you've gone long and you want to move your stop up, you just want to make sure that you don't put yourself in a position where you could get stopped out on a shorter time frame. But you get that because you understand that the market's fractal. And before you know it, it's several days later, and that's something that you entered off a 1 hour chart. Why? Because you blocked out the noise, you didn't listen to all the other nonsense that's going on around you and what the people are saying thing. You're just letting the chart guide you. And you're astute enough and understand how to manage the multiple time frames. I would always get accused of staying in trades too long. But nobody understood how I was basing that activity. They'd be like, "You're crazy. Like, why are you leaving that trade on? Take it off." I couldn't do that. I couldn't sleep at night or whatever. Well, the
Oh,
chart
that one.
the chart was just telling me that there's no reason to take it off. That's all. And if I get stopped, I get stopped. That's okay. But I'm not gonna end it too soon because it has legs. If it wants to run, I'm gonna let it run. Right? If you bought a thoroughbred, let the damn thing run. When it's time to take a rest, it'll tell you. You know, Bitcoin just doesn't have, at least not today, enough to break the trend, right? Is this a nice base though? Sure. Right? You have a nice move down, and then you base out, you base out, you base out, as opposed to going another wave down like you did here and here. This one catches a bit of a bid. We'll see how strong the bid is though. And there's the 112 level that we've had on here for quite some time. Still a relevant area. And what happens if the 20 gets below the 112 area and then you tag it? Well, that would be a first touch below here, and then you'd probably get the rollover. But you'll see it on the shorter time frames as it starts to unfold. There's really no reason to be surprised. Right? Like these people up here, they can't tell me that they couldn't see this coming. Nobody can say on this chart that, oh wow, there was no warning. Who could have saw the fade in Nvidia? That was impossible. Really? You must have been one of those guys reading charts for a big bank in 2008, if that's the case. Right? Like,
There
let's
were
be
people.
honest. Like those guys, I don't
Somebody
know
was
how they
doing
sleep
it.
at night. Yeah. Anyways, for those that are uncompromised and read price on a chart, you would have to see that this is already a bit of a top, price is fading, and so on and so on. You can't say you didn't know. It's not the end of the world. On this weekly chart, what could happen? Well, we roll over, we'll come back to the next appropriate level, which is the 20. It would be a first touch on the weekly. First touches typically bounce, and if it was to bounce, you'd be looking for it to take out the previous wave's high. In essence, it would create this low here and then a higher high. And then on the pullback from that, you would hope that you would create another higher low, right, to move the trend forward. But you can't say as price moves back to the 20 here and this kind of previous top level that you didn't see it coming. You can't really predict these major rollovers. It's a process. It's just a process. And the sky's usually been falling for a while before it gets deemed a problem, right? That's the other thing.
For sure. When you look back, you're like, oh my God, this
Yeah.
guy was falling a long time ago.
Yeah. Yep. I tried to tell everybody here too, this is CGC. Don't get your heart broken. This thing will break your heart, right? It's just, and here you go, right? Yet again. The weekly's a better tell. Look at that. This looks like that jam chart that we looked at, right?
Right, right. Some of those will come back to life out of nowhere. It's like that because after they just
Yeah.
been obliterated forever, it's like out of nowhere they just come to life.
Yeah.
Um,
Everything gets a heartbeat,
but
right?
yeah, Glenn, I want to say something to all your listeners because I love when I see the listeners on X picking this up because I know we got the gorillas and the TG, but we're spreading this knowledge to everybody. It's like the last bull run I made a good amount of money, and I didn't have the skills through the bear market to just do really good. and I hold myself accountable for that. That's why I'm very open about it. Why I want other people that are in this space right now, not just to only get caught up in, this side of the chart and this side of the trend, but there is going to be a bear market. It doesn't mean that crypto's over and there's not going to be no more blockchain technology. But I think right now, you have the opportunity to listen to people like Blunt and take these notes for sure. I hope all of you guys are taking. You guys can actually make sure that you can take care of yourself even during a bear market. And I think a lot of you guys are going to see that this is not only going to help you during this time of the market being, exciting and euphoric and all that, but you'll be that guy rubbing or woman rubbing their hands together even during the bear market and being able to short it while everybody else is panicking. So just definitely keep pulling up to Blunt's space. Give him a follow. I'm saying this for him because I'm doing my KOL thing for him because he's amazing. And so make sure you guys give him a follow for all those listeners on X right now.
Well, I appreciate that,
Amazing
Rico.
social knowledge.
One of the
You're a
things,
real one.
one of the things a bear market's great for, at least I find, is that when there's things out there that you love that you would love to buy more of, I'll trade my ass off and create a lot of capital, and then when the time is right, I'll buy that stuff up with my trading money, right? So, use that. Don't be afraid to sell short, right? In the bear market, if you want to be a complete trader, you have to be able to sell long and short. And waiting for those long opportunities when a market is selling off is just an exercise in futility. You're better off just kind of learning how to trade the market short safely, right? It doesn't have to be stressful. And you can monetize the chart up and down. That's true. Like when you hear people say, you can make money in both markets, that is absolutely true. You just have to be trained up in order to monetize the chart when the market
What
does
if
want to sell off. Yeah.
it happened to me. This is why I'm wearing my heart on my sleeve because I fixed this little thing to happen. Because what if we have a prolonged bear market and you're waiting for your long and it's just going dippity dip 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 dip
Yeah.
and dipping lower and all you're doing is focusing on a long and a long, and you'll have little moments like I did, because I was good enough to obviously catch it on some time frames that it was going up, but it was like swimming against the current. I swear I knew that there was something that was
Yeah.
off and stuff. And this is the ability that I can tell during this market, I'm trading whether I'm going long or short, I'm indifferent to price now. It's like there's a different disconnect and connection to it that I have now. And I just want everybody, because there's a lot of new listeners, there's a lot of new people in crypto. This is their first time around. And, I don't want you to get knocked out the market where because of the bear market, you just turn away from this thing altogether,
Yeah.
and if you can, educate yourself good enough, you can survive this and be a part of this. I believe it's a very special time with blockchain technology.
No, I agree. Like I think the tech is fascinating to me. Um, but not all tech gets executed, right? And that's one of the things that you kind of find in a new vertical is that there's a lot of great stuff, and some of that great stuff doesn't get the credit it deserves. Right? So you'll look at a name and you'll say, "Wow, that thing has everything going for it. There's no reason the market should need it out." But for whatever reason, it doesn't happen. And then something that's not nearly as capable takes off for no explicable reason. And that's, again, going back to the early days of the auto industry. There were no roads, there were no rules, there was nowhere to buy gasoline. You'd have to buy gasoline in 1 gallon glass jugs for your car if you could find it. And you would need a lot of it. And that's kind of where we are with crypto still. There's going to be a lot of players that won't be around in 5 years. There's a lot of them that, 5 years ago that aren't around today. And then the ones that were around 5 years ago and lived through all of that stuff will probably eventually catch a stride. If they can stick around, and there's a handful of them that have. FEG's a good example of that, right? It's had its moments in the sun, and then its moments in the dirt, and everything in between, but it's constantly evolved, and it's tech that kind of got it here, has got better, and now you can literally tokenize anything from from smartdefi.com. It's kind of taken on a new life, and that's, the ability to evolve, whether you're a business or you're a crypto project, is key. Not every business has the ability to evolve, and eventually they go away. What you're looking at is a Remax chart, and this is a company that I love to hate sometimes, and it's just been beaten up over time. But you can see that it's been pushed down on this weekly and kind of created a double bottom right off of the lower value range. So if you're charting this kind of, this asset or anything else, looking for possible reversals, this is what you look for. Look for things like this off the weekly, where you found a base. Right? These are the times, like these are the, when people say, well, you could buy the dip, but it doesn't always turn out to be the dip, right? This is an example of where it looks like you may have found a bit of a bottom, and it would be a much safer entry for Remax from a long point of view. The upside, if you break into this gap to the upside, gets you looking at this kind of structural level in here at around 10.5, and then you start looking for previous waves highs as well. So it's finally kind of based out. Will it survive? I don't know. It could roll over and we could be back down to that level too. But that's what I would be looking for over this longer time frame on a stock like this, is showing me that it might have based out at a particular level. And it's that, it's the second one that gets the cheese. The first mouse gets the squeeze. The second one gets the cheese. We'll see if that's the case here. If this thing was to break out, you have some very obvious targets to the upside, right? So you look up here at around 13.5, then the next bench is over here at around 19 and change, and so on, and so on, and so on. So if this does kind of turn around, you're going to have some targets to the upside that are quite clear on the weekly for Remax, if it was to continue. But I do like the basing and the double bottom there. So in all fairness to Remax. Anything else you guys want to look at?
No, man, really appreciate it.
Okay, well, we'll call this for today. And I'm around, kind of busy, but around for another day and a half, 2 days or so, and then I'm off for a couple weeks. We will pick this up when I return. I think it's like the 23rd or 24th, whatever that Tuesday is. That'll be our next stream. And if there's anything else you guys need in the meantime, hit me up, and I'm more than happy to help where I can. So I appreciate Rico, you jumping in today. I'm glad to have an extra set of hands. Old guys in technology, not really a good recipes. So I appreciate you being here, and I'm happy to jump in your stream anytime. Just give me a shout. I'm happy to join you. So, and we're talking about Rico's XPX stream that he does actually daily. So should check that out as well. All right, guys. Thanks very much.